Hi there. If you're thinking of selling your business either now or at some point in the future, one of the big things that's going to be running through your mind is how will you be impacted by tax? And of course, this is a question that comes up a lot for us. You know, how do I minimize the tax? I heard my neighbor sold his company and he paid no tax. You know, how did he do that? There's all these sort of things that are sort of swimming around out there. So we're going to just share 3 simple tips for you to consider as you're going along in your journey. Now, the first thing is think about your actual structures, right? You know, company structures, trust structures, what entity owns what, how will any sort of consideration or payments you get for your business, how will that actually get distributed and how will they be taxed individually? So structure is the first thing I'm going to suggest. The second thing around tax is understand a thing called small business concessions, SBCs. Now, if you're thinking about getting out in the next few years and you're not already talking to your accountant, this is an important discussion to have. Now, I'm not going to go into the detail of SBCs today because there's a bunch of complexity around it and a bunch of different sort of rules as to whether or not it applies to you, but seek some advice, ask the questions and dig into it a little bit. The third thing is look at the structure of your deal. So what are you actually selling? Because if you're selling the shares of the company versus the assets of the company, that can have a very, very big impact. Now, how you slice and dice these deals, and let's be honest, there are 1,000 different ways to do that, they will all have slightly different ramifications as to what sort of tax you're going to end up paying. Hope that helps.